Okay. ABLE accounts. ABLE accounts are a tax advantaged savings account. They are an amendment to the 529, the same law that created 529 plans. So if you created a 529 plan before your child was born or right after your child was born to fund education, it's a similar type of account. Those 529 plans are specifically for education. An ABLE account is for disability related expenses. The beneficiary is the owner of the ABLE account, meaning that it is created under the Social Security number of the individual with the disability. They also have control over the ABLE account unless there is a guardianship or the individual is a minor or there is a power of attorney in place. The Medicaid payback provision is in all accounts regardless of who contributes the funds. And the money may only be used for qualified disability expenses. However, that has been defined really broadly, really broadly. What are qualified disability expenses? One that is a big one is rent. ABLE accounts can pay for rent. ABLE accounts can pay for groceries. ABLE accounts, you just need to be able to track what you are using this money on and then explain how it is used. I have not personally worked through an audit of an ABLE account yet. They are still relatively very new. They were created in, 2016, 2017. And Washington State didn't get one until I believe 2018. So these are new types of accounts, which is probably why a bunch of people have questions about them. ABLE account limits, if it's under $100,000, it is not a countable asset for the Medicaid resource test for that $2,000 limit with SSI and certain DDA benefits. But each state can set their own limits for how much an account can hold. Initially in Washington State, I believe it was 85,000, but they recently changed that. In other states, it is unlimited. And in many states, it is set that you can only put $100,000 in it. Others are like $1 million. It just depends on which state you're looking at. Annual contributions can only be $15,000 per year for all contributors. So if the individual with the disability is putting like their paycheck into an ABLE account, or they're using it kind of as a savings account where they put $100 this month, $100 next month, and then a couple $1,000s towards the end of the year, and then the parent wants to make a $15,000 gift, that is not allowed. It needs to be $15,000 total from all contributors. That is set to the gift tax exemption limit. So if you're paying attention to gift tax, that will go up as a gift tax exemption goes up. Who qualifies for an ABLE account? The owner must be an individual with a disability. That disability is defined using Social Security's definition of disability. The disability also needs to, the individual needs to be disabled before the age of 26 and may establish before or after the age of 26, but you need to show that the disability started before the age of 26. There has been legislation every year since the ABLE Act passed to try and get this limit either raised or eliminated, specifically with individuals from a traumatic brain injury. community. But as of right now, you need to be able to show disability before the age of 26. So how does an ABLE account work? It does vary from state to state. Different states have different options for how it is used. In Washington does have an ABLE account, but you don't need to use Washington's ABLE account just because you're a Washington resident. You can use Utah or Tennessee, whatever. And I recommend, if you are looking at ABLE accounts and don't know which state to use, to go to the ABLE Account National Resource Center. I believe I put the website in my handout, but it's really easy. It's ABLE NRC, ABLE National Resource Center, .org. Or just Google ABLE National Resource Center and it'll pop right up. That is a fantastic resource. They have a state-by-state comparison so that you can choose Washington, Oregon, California, Utah. And then it'll show different metrics of how does it change, who manages the money, who, if there's any fee to use the funds or management fee, if there's how are taxes treated. It does grow income tax free, but highly recommend using that as a resource. So it is not just a regular bank account. It's not like you just go to your bank and say, I want to open up an ABLE account. You have to go to the state's website for their ABLE account. So Google Washington ABLE account and you will see establish an ABLE account. Some states issue what's kind of like a prepaid debit card that can be used. That's again state by state basis, but it's not like you can just use your debit card to just access the funds immediately. At least not in any of the states that I am familiar with. If somebody knows of a state that you can order a debit card and it just swipes directly to the account, let me know. Who controls the account? The individual with the disability, unless there is a guardianship or they indicate that they want somebody else to do it. The owner of the account, there's no representative payee required, which there is like in a deed endowment trust, and even with an SSI bank account, there needs to be a representative payee. But there doesn't need to be one here. And they are subject to IRS audit. I have not experienced an IRS audit of an ABLE account yet. So I can't speak directly to how those look yet. I wish I could give you all more answers on that, but can't. So that is my brief on ABLE accounts. I did list a bunch of the qualified disability expenses in my handout. It's at the top of page 5. And then the Washington Administrative Code also sets out different qualified disability expenses, which are just below that on page 5. Okay.
Well, we have lots of questions.
It appears so.
If you can face just a little bit closer to your computer, I think the sound might be more consistent then.
Oh, okay.
Okay, great. Oh, perfect. Yeah.
Sorry.
Okay, the first question is, can the ABLE account funds be used for something like a down payment on a house?
I believe so, but I would need to double check. When it comes to housing, I always like to check the regulations before I give particular advice, specifically with housing, because the rules do change. It feels like the rules change all the time when it comes with housing.
I should maybe just mention in our own experience, because my sister retired and got quite a bit of retirement money from Puget Consumers Co-op. And she was able to invest that in the DD Endowment Trust, her first party trust.
Mm-hmm.
And we were informed that she could use that take it out to use for purchasing a house, just so people know that could be an option. Can it be used, ABLE money from the ABLE for things like entertainment, like tickets to a show?
Yes.
Is a couple of questions about what impact it might have on a Section 8 voucher.
Mm-hmm. And I have to say that I am not super well versed when it comes to Section 8 and ABLE accounts. So I might have to say I don't know on some of these questions. And I apologize in advance for that.
I mean, it seems to be our understanding that it's not the intention for ABLE accounts to disqualify you for anything in principle, right?
Right.
So what we have to do is get a proof case that shows that for sure it doesn't.
Yeah.
As you mentioned, the Section 8 vouchers, sometimes they're handled differently. What about filing on your tax return any earnings from an ABLE account?
So an ABLE account typically will send you information on the growth of it. However, it is a tax, the income that is generated from an ABLE account is, I think always tax exempt.
So it's sort of like a Roth account in that sense, right?
Yeah, but always you always want to disclose these things to your accountant.
Right.
And double check with them.
And you already said that you can use ABLE funds for housing, like rent, for example.
Yes.
Can you transfer funds from a third-party special needs trust to an ABLE account, assuming that you only transfer like $15,000 in a year?
Yes.
Yes.
And the only reason I would do that is essentially to allow the individual to have access to that money to spend on what they want to spend it on or to pay for rent.
Yeah.
The reason why I say that is because as soon as that third-party money goes into the ABLE account, it will then be subject to a Medicaid payback provision.
Okay. You're saying that ABLE accounts are subject to Medicaid payback?
Yes.
That's interesting, because my lawyer told me that we should get a will for my sister so that if she had money in the special needs, if she had money in the ABLE account, that it could be specified where it would go to, because Medicaid didn't have access.
There is a Medicaid payback provision in ABLE accounts. However, if there's anything left over after that, then you can specify where that money goes.
Okay, that's really helpful to know. That's different than I'd heard. One question about taking money out of ABLE, will it be counted as income? Like if you're trying to limit how much income you have in a given month for qualifying for Section 8, for example.
So if you pull it out, I would not recommend taking money out of an ABLE account and putting it into your checking account, because that may not be considered income, but after it's been in your account for more than a month, it could be considered a resource. And that's the whole reason why you have the ABLE account, is that you want to keep your checking and savings accounts still under that resource limit.
Okay, that helps. Can you deposit like child support money into an ABLE account?
Yes, you can.
And can you have more than one ABLE account? Like
no.
More than one in one state or more than one in other states? So you can have just one? Just one. So whichever state you pick, that's the one you're going to have? Yes. Can you close out an ABLE account?
Yes.
Okay. So that was a question, whether it's transferable from state to state. If you opened in Utah, could you transfer to Washington? So you can do that.
Yeah, and a lot of people established ABLE accounts in other states before, because Washington was kind of actually slow to get their ABLE account set up. So a lot of people established, for some reason, Pennsylvania, I saw a number of people who had chosen Pennsylvania for whatever reason. and then they were able to transfer to Washington. You need to look at the rules because there is a certain amount of time where you can have two accounts open at the same time because you
Oh, I
have
see.
to establish one in order to fund. So there's but there is a time limit for how long you can keep those two open. So you kind of got to be on it.
Okay, good. And I see some more questions are coming through, which I'm going to go and look at in just a moment. While I glance at those, there was a question about, can you explain again, what is a Medicaid resource test?
Oh, yeah. So with Medicaid resource is Medicaid is a needs-based program that there's a functionality test and a financial test. So you need to be able to functionally show that you are an individual with a disability, and financially you need to show that you need this money, meaning that you are unable to go out into the free market economy and earn over a certain amount of money. But also, really what we're talking about here is that you can't have countable resources over $2,000 in order to qualify for Medicaid. And that includes Medicaid services. And I'm not talking about Medicaid expansion. I am not talking about ACA, Obamacare, that type. I am talking about traditional Medicaid, and SSI is the cash benefit under that.
Okay, thank you. Here was a question. Does money that goes into an ABLE account has to be after-tax money? Is that correct?
I would need to look that up.
Yeah, that's a good question.
Yeah, I want to say yes, but I'm not 100%, so I would need to look that up.
Does Section 8 consider the endowment trust first and third-party trust assets, and could those qualify you from Section 8?
With Section 8, I'm going to go off on a little bit of a tangent on my frustration with Section 8. So Section 8 says that they do not consider special needs trusts as an asset for the individual qualifying. However, if you ever use that money, they consider it income. I have argued in front of Section 8 and in front of an ALJ that I think that that is wrong. And that I think that that violates their rules and regulations. They have disagreed with me. And and unfortunately, the 2 or 3 cases that I have taken, the amount that was in the trust, the amount that we were talking about, it just didn't financially make sense for the client to continue on with the representation. So they decided to just only use their trusts for qualified expenses that Section 8 would not consider to be income. Specifically, in the case that I am thinking of, if you only use your special needs trust for medical related expenses, Section 8 does not consider that as income. But the individual also wanted to use it to pay for their cell phone bill. And Section 8 did consider that to be income, even though the special needs trust cannot be used for rent. I tried to argue that, but they disagreed with me. So if you have a special needs trust, it should not be considered a resource. However, if you use it, it may be considered income.
You have to be careful about your choices and when to use it.
And unfortunately, different housing authorities treat it differently. So I can't say like, oh, if you just use it for medical, then you're in the clear. I don't feel comfortable saying that because of the inconsistencies that I have seen and that I have heard of from across the state.
Wow, okay. Can you say more about what an ABLE account cannot be used for?
That's kind of hard to answer. um, because they've defined it really so broadly that so somebody asked earlier, can it be used for entertainment purposes? And that is one of the things that is kind of like if you read the statute specifically, it's kind of a gray area. I always argue that yes, that is something that could be a qualified disability expense, because it provides for the health and wellness of the individual. And for example, video games would often not be considered like, oh, how is that a disability expense? Well, if you've ever seen an individual who has autism,
Closer to the mic if you could. Yeah.
Okay, does that work? If you've ever seen an individual who has autism who uses their video game as a means of coping with a situation, to me, my brother's Game Boy, especially when in his high school years, was 100% a disability related expense. So as long as you can kind of tie those things together, I would argue that it is a qualified disability expense. Things that sometimes people are uncomfortable but are definitely qualified disability expenses are paying for a companion to go with them to a show, for example. So if you wanted to get a ticket to go see Frozen at the Paramount, but the individual would not be able to navigate that system by themselves. They wouldn't be able to like find their seat and order their drink or whatever, that they need somebody to go with them. Their ABLE account could be used to pay for that person's ticket as well.
Great. I just got a follow-up from Beth Angela. This is really helpful. She
Okay.
just checked her son's first party special needs trust paperwork, and it says, because of an oddity in the law, persons establishing first party special needs trust must fund the trust with at least a small amount of seed money of their own before putting any other assets into the trust. Please note, SSI may reject the trust if you do not complete this essential step. It can be as small as $50, depends on the bank. Guess that answers her question.
Yeah, and I know that the law around first party special needs trusts changed about 4 years ago, I want to say. So if her trust is more than 4 years old, then because I'm almost 100% that about 4 years ago, the law changed that an individual can actually establish their own special needs trust. And that was an issue. But if the parent is establishing the trust, again, I would recommend just going all the way and setting up the bank account and everything.
Here's another clarification. Is a third-party special needs trust distribution to an ABLE account considered in the rent calculation by Section 8?
I do not know.
Can ABLE money purchase gifts for holidays? For example, if her daughter wants to buy friends a $20 gift for birthdays or Christmas, but SSI rules don't allow gifting money, does it not allow them to do that?
I don't think I'm currently looking at the law because I printed it out, the qualified disability expenses.
Yeah, lean in just a little bit more if you could. Thank you.
What?
Just lean in a little bit closer if you could. Sorry.
I don't think that gifting would be considered a qualified disability expense. I wouldn't recommend it. I would recommend if they want to do gifting and things like that, use what is in her checking account. If she has a checking account, use that instead of the ABLE account.
Okay. Oh, wow. I think that may be the last question, unless I've missed something. I'm going to just kind of glance over again for a second. This has been wonderful, Katie. I hope you're not too tired out.
Oh, no.
It's like, it's, great to, at the end of a long week and to put in all this. And thank you everyone for coming. I'm wondering, Aisha, do you want to come on for a minute, Aisha, and let's talk for a second?
Can you see me, hear me?
Yes, we can. Yeah, I'm wondering if it would be okay if we allowed a few people to unmute themselves and ask their question directly, because I know that always kind of feels nice for people.
Sure.
I have a quick question. Hi, I'm Jody Hoops. I'm wondering if you have a third party special needs trust and your beneficiary passes away. What happens to those funds?
And a third-party special needs trust?
Mm-hmm. Yes.
Yes. So in the third-party special needs trust, there should be a termination provisions written into the trust that dictates where that money should go.
But so there's not a payback provision on the third party one. So would it need to go to the state, or could it be dispersed?
No, that is specifically for a third-party special needs trust. That is one of the reasons to create the third-party special needs trust, is that it doesn't go to the state. There's not a Medicaid payback provision, and that it can go to other surviving children. It can go to a charity. It can go to wherever the heck you want it to go.
Perfect. Thank you. Thanks. And thanks so much for this. It's been very, very educational.
You're very welcome
For joining us. I do want to pop back in and just read the comment from Kathy Whitaker, if you don't mind, Kathy. I think it is good to make a payback to government when the person dies. If government has been paying for services for the person for many years, then why not a payback considering large funds paid for person's care? So I think it's good to put that out. I know my parents felt very strongly the same way, that it's not unreasonable to pay back to the government what the government gave to make life more reasonable for our loved ones.
And you can absolutely do that in a third-party special needs trust. It's just not a requirement.
Any other questions? Anybody would like to unmute and ask a question directly?
Jan Darcy, it looks like you're talking, but it appears that you are muted. And it's just lucky that I have you up on my screen.
Okay.
Can you hear me now?
I can hear you now.
Now? Oh, you can't hear me now. The question is that you were just talking about how if you took something out of the trust, it would be considered income. If you had to pay $5,000-$6,000 for dental work and you took it out of the trust, and then they would consider that as income? That's what you're saying?
So I just want to be really clear when I'm talking about taking money out of the trust. This is one of the issues that you want the trust to pay the third-party providers directly. So you want to have the trust, like if you are the trustee,
check out to the dentist.
you write the check out to the dentist.
But that would be
you don't transfer, but if you transfer that money into the account of the beneficiary, then it's income.
Oh.
Yeah.
Okay. All right. Okay.
So you don't
because
want
that
to
was.
hit- I'm sorry.
So
go
you
ahead.
wouldn't. No, but can you do it to the guardian though? I'm the guardian, and so they. I'll stop because we've got this interference here. But the money was made out to me. It was not made out to the dentist. It was made out to me. Anyway, no, listen, I'm sorry we got this background noise. Listen, just great. Would love to follow up after I read more and look at more stuff. Thank you, Katie.
So, and I do want to clarify, because that is a good question, is that in a, with a trust, if you have a trust that is established privately, like with an attorney who has drafted the trust, you do want to include language in there that allows for reimbursement. Oh, can you hear me now?
Okay.
That allows for reimbursement. So if it's not feasible for the trustee to like go to IKEA or go to the dentist, that a guardian can provide the receipt, and
Yes.
the trustee just needs to be able to document what that money was used for, so that it doesn't just look like you're paying the guardian $5,000.
Yeah.
You
no, I
want
know
to
there's
show.
a receipt and everything, but I didn't know if you had to declare that just having to finish the taxes as income, that you got the income from the trust. You wouldn't, that would not be
I-
considered a medical expense or something.
Yeah,
That's what
I
it's
would
considered.
double check with your CPA, but I don't believe so. I always get really
never- okay.
skittery around tax issues because I'm married to a tax attorney and my mom is a CPA. So I just always am like, ask them.
Yeah, I've had
Thank
lots
you
of
so